We talked about the medium term, 2026. We talked about top line growth of 4 to 5%. And we talked about the services businesses being a significant contributor to that, both in the top line and our services businesses at a 20% return on tangible common equity. In the wealth space, we brought in new management there. And we're keenly focused on how we grow the top line and how we improve margins and how we improve returns there. That's going to involve everything from right-sizing the cost structure to increasing the banker productivity to driving new net investment assets across that business. And we do believe that inside of this window between now and 2026, you'll start to see that value play through our financials.
Now, Citigroup CFO Mark Mason, and Shanali joins us now from Citi headquarters. Hey, Shanali, in that interview, what were some of your bigger takeaways?
There are a few things. You have Mark Mason, in addition to that interview, here at Citigroup's headquarters, addressing more than 100 different investor groups here, trying to pitch that business, that services business, as its crown jewel. But on the other side, there are some questions also, and you heard them all addressed today. How soon can they get to wealth profitability in a faster pace, in a more robust measure here, as well as... Now, you have to remember, when it comes to Citigroup stock, you're looking at a firm that is traded well below book value. There have been a few issues that have been an overhang. It has grown less fast than its rivals here. And it's not just a question for its own investors, but of course Citigroup's own employees, right, Alex? Because they brought in so many different people recently from Bank of America, from JP Morgan, to help turn around the ship at a faster pace. We're starting to see that pay off, but again, there's still work to be done here.
The work to be done, though, the question mark in the investment banking business, I mean, they said their fees are going to be likely up 50% for the second quarter. That's pretty solid. Can you put that in context for us?
Yeah, definitely, because you've seen this investment banking rebound. So parts of Citigroup's turnaround story here are contingent on the market too, particularly investment banking. And the interesting thing about investment banking is they brought a very senior leader over from JP Morgan. It was a big stunner to the market when it happened. He started just a number of weeks ago. So when I asked Mark Mason here what the mandate is, from the top of the house to Citigroup's bankers, it's profitability. This is a story we've heard at some other banks before. It's not just the amount of dollars you bring in, it's the amount of dollars you bring in per banker. And so as the investment banking industry starts to rebound, it will be interesting to see how they put that pressure under those bankers with new leadership, with, by the way, the competition coming in certain businesses. We spoke about private credit, for example, Alex, and remember, when it comes to Citigroup, the question is friend, enemy, partner. When it comes to the private equity industry, he said yes to all three, though it is interesting to hear Citigroup open to doing more partnerships in the private credit space, and very much a lot of curiosity on Wall Street on how that plays out, what that kind of partnership would look like.
Frenemy. Maybe that's a new word we're going to make up right here. Frenemy. All right, Shanali, thanks a lot. Bloomberg Shanali basket. You really see over the last couple months, Citi underperforming, say, JP Morgan and Bank of America after a super solid run over the last year. All right, Hannah, Elf Beauty is sitting pretty today. We shared this morning, bringing a fresh look on the south side about the growth opportunities for the cosmetic company. This is the close on Bloomberg.
Primary care to acute care clinics to ER and everything in between. We're here to help. Teladoc Health. Better health made possible.
I've seen firsthand how some fashion businesses make women feel. And I mean, there's one thing, being really vocal and being an Instagram activist and talking about something. There's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about, how do I take everything that I know and I'm actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, time now for top calls. We'll look at some of the big movers on the back of analyst recommendations today. Let's start with Kroger. BMO Capital Markets upgrading the stock to outperform, calling a $25 million merger with Albertson a pro-win-win scenario, no matter the outcome. Analyst Kelly Banya is bullish about the deal, saying no deal is more likely and could result in higher earnings per share accretion. Those shares jumping almost 2%. And NVIDIA, that's next in line. Here's the call. Rosenblatt Securities lifting its price target to $200 from $140 in the wake of last week's stock split. The analyst is urging investors to look at software as well as hardware, saying we anticipate this aspect will significantly increase in the next decade in terms of the overall sales mix. Plus, valuation could near $5 trillion in the coming year, those stocks surging over 3%. And let's end things here on Elf Beauty. Canaccord Genuity raising its target to a street high of $250. Analyst Susan Anderson says the cosmetics company is poised for another year of earnings beats and forecast boosts. She's also positive on Elf's agreement to expand its products at Walmart. She keeps buy rating on the stock, and shares are up a whopping 9%. Those are some of your top calls. And we're happy to have the analyst behind that last call with us. Susan Anderson is Managing Director and Senior Equity Analyst over at Canaccord Genuity. All right, Susan, walk us through what was behind this call to a street high price target.
Yeah, sure. So management guided the year to 20 to 22% growth. The street's at about 25%. Based on our math, we think it could be as much as another, 40% plus year for a couple reasons. So one, the track channel data, which is mass food drug, is running still about up 30%. That does not include the space gains that they're going to be getting this year in Walmart, which we think easily adds another low single digits on top of their guidance, if not more, because depending on how much that space is, it could be as much as $160 million more in sales annually. Then also they gained space in Ulta with their new Naturium brand. We're estimating Ulta is about a low teens percent addition to the year. That's also not in the track channel. On top of that, they've seen their DTC and international segments outperform. They grew over 100% last year. Internationally, they're also gaining a significant amount of space in Canada, the UK, and then also in Mexico and Sephora. So we think it could easily be 40% plus this year. And so we're forecasting another beaten raise year.
So, Susan, this comes on a day when retail sales disappointed and there was a lot of focus being put on the consumer being stretched and being very price sensitive. How exposed do you think Elf is to that kind of macro environment?
Yeah, so if anything, Elf should benefit from that because it's a value play. Their products are even cheaper than other mass products such as, Maybelline or Revlon. So we don't think we've seen a ton of trading down yet. And we just recently did our semi-annual beauty survey where the consumer once again said they're going to mainly spend more on beauty or at least the same. And they also said that they're still trading up to prestige. So we see Elf as more of a share game. They're taking from other of the legacy mass players. In some cases, you're seeing them take from prestige when they roll out a product that's just as good, such as their lip oil, which, really competes with that Dior lip oil. So, we think that the consumer is still trading around the store more. So they're finding, things to buy at value price points that they like and they think it's worth it, and they're also still buying prestige where they think they can get better products. So, we think though, if the macro does start to squeeze the wallet more and we do see more trade down within beauty, e.l.f. is perfectly positioned to benefit there.
This is my whole theory, Susan. Like, invest in your face. Like, this is my thing. I feel like that's a thing for a very long time. So you're saying basically, if we do have a value war within cosmetics and face care, that they're already like the top in the value war?
Yeah, so e.l.f. is some of the cheapest products even within the mass channel. So they're cheaper than L'Oreal, cheaper than Maybelline, and they've done that by having the supply chain where, they manufacture the majority in China. They have been moving out of China, but they have a whole team over there doing quality control, and they're able to manufacture prestige-like products at a value price point.
Can they grow margin at that, Susan?
Yeah, so we see them staying EBITDA margins in the low 20% range. Last year they were almost 23%, so still very strong margins, but they're investing more in marketing this year. So they expect to invest 24 to 26% in sales and marketing. So because they're growing that marketing spend, we don't see margins expanding a whole lot more. Potentially they can get a few more, 10 to 20 basis points out of it, but we think most of the growth is going to come from the top line.
All right, Susan, really appreciate it. Thanks for jumping on with us. Susan Anderson over at Canaccord Genuity with that price target upgrade of e.l.f. Beauty. All right, coming up, we're going to focus on the challenges facing the commercial real estate market. You heard Chris Ailman talking about real estate in general, and there are pockets of strength. We're going to get the take with David Steinbach. He's global CIO at the real estate investment manager Hines. This is the close on Bloomberg. The S&P up 0.2%. This is Bloomberg.
With Teladoc Health, it's more than virtual care. It's the security of knowing your call won't drop. It's making life-changing decisions. It's giving patients less to worry about every single day. From primary care to acute care clinics to ER and everything in between, we're here to help. Teladoc Health, better health made possible.
If you're retired, self-employed, or recently lost benefits, medical and dental bills can add up. But what if you could protect yourself from costs not covered by your government health plan? Introducing Freedom to Choose Health and Dental Insurance by Canada Life. The flexible plan that gives you the power to choose the coverage you need, so you can stay smiling while you're at the dentist. See the savings at the optometrist. And feel good at the pharmacy. We even have plans for people with pre-existing conditions. Plus, Freedom to Choose covers chiropractors, physiotherapy, massages, and much more. It's easy. Apply in under 15 minutes and get coverage for life. Freedom to Choose. We've got you covered. Visit CanadaLife.com/myplan to start protecting yourself from unexpected medical and dental costs.
Two assets in the sports business that are year long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
They're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, and by ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. The investment hobbies are generally not profitable.
Well, in the US, it's getting better the most. We have seen an uptick across all asset classes in the first quarter. Even office leasing was year over year 14% up in the US, 12% in Asia, and only 8% in Europe. So you see the difference. And we also see that the overall interest in buying commercial real estate is growing.
That was the JLL CEO talking commercial real estate on the program yesterday. And if by magic Romain Bostic appears right here next when you show up, like half an hour,
Beetlejuice to say my name 3 times.
drags himself in. Like,
sorry to bring you down, Alex. How you been? What you been talking about for the last 30 minutes?
Well, I don't know if you've heard this before, but it's NVIDIA's world, and we're just living in it.
I know.
So that is the
Are
thing.
they still the most valuable company?
It is still,
Okay.
and we're at 31 record highs. I mean, basically, just rewind to yesterday, it's the same story.
So yesterday is the same story, but it's kind of interesting you bring up NVIDIA. I was actually just rushing over. I was at an event that was sponsored by Kijum, of course, a unit of Prudential, and they were really kind of talking about the next sort of big disruptive events. And needless to say, AI came up time and time again, but real estate came up as well. And I actually talked to their head of real estate over at Kijum Real Estate, head of equity business and the real estate business, and he said it's more than just AI for them. You know, it's like the data centers, but it's healthcare as well, and to a certain extent, housing, particularly multifamily and affordable housing.
It's just that office real estate, right? Like, that's still the warning spot.
Nobody's want to talk about office real estate
Like,
for some reason. I don't know why. But you know, but there's opportunities elsewhere, Alex.
Yeah, let's find them.
Yeah, we gotta find them here. Well, let's continue that conversation and talk to somebody who knows a thing or two about finding real estate opportunities. David Steinbach joining us right now. He's global CIO over at Hines, $100 billion global real estate investment manager. He's been around for quite a long time here. 65, not you specifically.
No, me.
Yeah, you don't look a day over 50. But let's talk about your business though, because in all seriousness, when we talk about sort of the inflection points in real estate, the pain in the commercial real estate space, or at least in the office real estate space, when we talk to folks, including JLL, Christian Ulbrich yesterday, there's still a lot of optimism out there, still a lot of opportunity. Where's your money going right now, or where do you want it to go?
Yeah, I mean, certainly this has been 2 years in the making in terms of a reset. I think it's really important to remember that this has been going on for a while. 500 basis points of interest rates all over the world going up is going to be a disruptive force in the industry. So it's taken a minute for the industry to get its head around that in terms of how to allocate capital. Without question, right now, you know.
But you've had a year to do that now. I mean, rates have been at 5% now, and if you believe all these Fed speakers are not going down anytime.
Yeah. Look, I mean, we have been dollar cost averaging into the market the last 12 months. This year, though, our deal volume this quarter is about 88% more than it was a year ago. So there's a significant uptick. Some of that is a low basis we're coming from last year. So we are deploying capital. It's mostly in residential and retail right now around the world. We are seeing opportunities in retail. Yeah. Not malls, but more necessity based, right? So, it's been 15 years since retail has been under a lot of scrutiny all over the world, and a lot of investors have shied away, and not a lot of product was built in that time. And so the winners and losers have been mostly sorted, and we see some opportunity embedded in that now. So we'll clearly see what's going to win.
Is that like grocery stores? Like, what kind of retail are we talking about?
Yeah, I mean, certainly anything around grocery store, but also we're integrating retail into our existing mixed-use projects we have. It creates footfall, it creates energy around centers that we want to activate with multifamily as well as office, bringing all that stuff together. Retail's been a useful tool in that.
Where else? So okay, you have the retail sector, and then what about the data centers / logistics? And I say slash because I feel like logistics had its moment, and then it came down, and then data centers having a moment.
It seems like it's in the beginning of a hype cycle. We've been active in data centers for a very long time around the world, and we've worked with some of the largest groups around the world to do that. It is interesting when you think about this wave that's happening in data centers, and what concerns me is more the energy crisis that seems to be going to be a part of this conversation. That's not yet. And I think that the energy use is something that is parabolic in many cases, and it will impact where data centers can ultimately locate, that and data privacy laws. And so those two constraints, I think, are going to come down into the market and will need to be priced in. And so that will be a governor, if you will, in terms of how much we can build, because we're leaving an era where we used to build things and you could plug it in pretty easily. And I think that era is coming to an end. A lot of municipalities are looking much harder at the planning expected and the power needs that these data centers have.
You referred to it as a crisis. Is it really that critical?
It's not.
Yeah.
Well, this is one I think will come. It's not here today for sure, but I think it's one to watch because infrastructure will need to get built up pretty quickly, and it's not a muscle that a lot of localities have.
Well, how do you sort of pick and choose where you think those safe places might be, the localities that maybe have the ability or at least the willingness to do that?
Right. Well, certainly, looking globally at the data center opportunity, there's a lot of ways to look at it. I think, again, looking at where energy is available and the cost of that energy and the how sure the supply is of that energy. And so, in Europe, for example, places like Poland are increasingly interesting to a lot. Places like Texas as well. But again, I think a lot of this story is yet to be told as the needs get unfolded by the hyperscalers.
Where do you not like what is verboten right now in your office?
Yeah, I mean, look, the conversation of office comes up a lot in that, right? In terms of is that something that you don't like? I would say that we are very selective in what office that we are doing. I do think that opportunity is going to really emerge this year. I think we've yet to have seen it. It's certainly been, the four-letter word of most investors' offices in terms of let's go buy more office. I think that sentiment is going to change this year. I think that we're going to see some key trophy trades in some of the gateway cities. Mm-hmm. And I think once that happens, the market will have a lot more clarity how to price the sector. Right. We've not seen those trophies truly trade yet, but that's coming. I think it'll happen this year.
Well, why would that provide better price transparency? I would assume that those trophy properties, the prices on those would be maybe a little bit distorted from the reality of the rest of the market, or
and some of it has to do with what's happening in the fundamentals in the sector, right? So what I'm seeing is this real separation between what capital markets see and what's actually happening on the ground in some office projects. The best office projects are well leased. The rents are good. They're performing quite well. And so when those trade in the market, I think the cap rates is how we normally look at the value and relative to the cash flow stream. I think that will look a lot better than people are expecting because the stability of those cash flows is very real.
You're planning it, but you're looking at those cap rates much further out. When we talk about interest rates, a lot of real estate investors, at least on the commercial side, will tell you that the Fed doesn't matter as much as maybe the media makes it out to be, at least for them. So when you are sort of looking at a project where you have to kind of forecast 10, 20, maybe even 30 years out, what's going to look like here, what sort of brings you to that determination of not interest rate?
Right. Yeah, certainly. Look, any kind of time you're valuing, especially real estate, you look at multiple levers, right? You look at the basis, you look at the cap rate. What we focus most on is what value we can create at the real estate itself and how we can drive the income growth of that real estate. And we know if we get in a good basis and we can create real income growth, that will be valued on the other end, regardless of where interest rates are. Then how you finance it is the wrapper around that, and the financing strategy is going to change, depends on where interest rates are.
So when you say the trophy trades, can you give me an example of that and what the pricing might look for that will kind of clear the market?
Yeah, look, I think just having the clarity is the point.
Just getting it done.
Just getting a couple of deals done where the market can see, okay, this was a stabilized project. This was not a distressed bank deal. This is a project that's difficult to get your hands on, and somebody bought it. And I think once they see how that prices, it's going to be clarifying. And I do think, cap rates will be above what they were, but I think they're going to be less than what people potentially are expecting when they read the headlines of what's happening with lenders and I would call the more commoditized office.
All right, David, great discussion. Always great insights. David Steinbach there. He's the global CIO over at the real estate giant Hines. And, Alex, it gets to the point, too. He talks about the idea that we haven't had a lot of transactions. We've heard this from a lot of folks in real estate. You don't have that same type of price discovery that you might have had in a normal cycle. So maybe if some of these big properties come online and you get to see what they're real, or at least what the market thinks they're worth, then maybe that does aid the rest of the market.
It's who's going to want to be first?
Nobody's
right?
supposed to be first.
I know, but like someone's gonna have to be first. Like who's gonna wind up pulling that trigger at some point?
Yeah, and I mean, and maybe that helps accelerate things. Maybe somebody has to be that sacrificial lamb and just come out. And I don't know. Can we pick and choose?
No, but I don't think they want to either. So there's that as well.
All right. Well, we're looking at I guess a middling day here in the markets. Markets right now, at least on the broad level, relatively unchanged, but some big individual movers out there as well. Shares a check. I saw this in after hours yesterday. They came out with the big news here about cutting jobs, and you're seeing actually a big boost here in the shares on the day, up about 8%. The biggest intraday rise going back to November. It's our stock of the hour. We're gonna have a full breakdown up next on the close on Bloomberg.
With Teladoc Health, it's more than virtual care. It's the security of knowing your call won't drop. It's making life-changing decisions. It's giving patients less to worry about every single day. From primary care to acute care clinics to ER and everything in between, we're here to help. Teladoc Health, better health made possible.
Familiarity is comfort, but you can't tap into fixed income's full potential without exploring the full landscape. Go beyond the obvious with a global perspective. AGF, invested in discipline.
Canadian chickens are raised right, without hormones or steroids. Because when you raise chickens right, you get good chicken.
Bloomberg Equality, celebrating inclusion this Pride Month.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It's time now for our stock of the hour. A closer look at Chegg, the online education platform, out with a new plan to cut costs and develop new offerings using AI tools. A big restructuring of the company. Shares popping about 7% here on the day. Abigail Tool will join us for more. Short out shares are up as much as 25% at one point here. This was kind of, I was looking through the press release. This is kind of a sprawling reorganization. There's job cuts. It's talking about leaning into AI and making sort of one single distribution platform here. Where's the optimism coming from here? What's happening?
So I think the optimism is coming from the fact that the stock basically, as of yesterday, was at a record low. I mean, this had been a greater than $100 stock. Now it's a penny stock. So you can't go much further down from where they had to go. They had been, so they needed to do. You could go to zero. You're right. And I've seen some actually, for better or worse, I'm trading some stocks that were low now. But in any case, with this stock, so you had this big decline. You had a short interest of 19%. You did. So you had that big pop higher. Now the fact that we're off of the highs. And then you put in this AI mention. If we go back to 2018, 2021, that is when the stock was a greater than $100 stock. They blamed the pandemic, they blamed the economy, and they basically cut the outlook. And in that 1 year alone, it lost 80%, 75%. So that was the big problem, and they've kind of been starting to
And then after 2022 and the introduction of ChatGPT, there was all this talk about how AI was sort of cut into some of these online education companies. So kind of interesting thing now that they're saying basically we're going to have our own sort of AI.
Well, and some analysts are saying that AI has been a part of a piece of the problem for them. They're pretty profitable, but they've been unprofitable for a couple of years. Next year, they're calculating to become profitable again. But the AI on their platform, it certainly was a piece of the problem.
No, I'm not.
Because these people just asking questions. I guess now that's kind of what in theory ChatGPT is.
But then, I mean, if you think about it, like ChatGPT and AI can't yet answer who won the 2020 election because of all the noise surrounding it.
Oh, that's interesting.
So it's like, I don't know how that then dovetails with, education. Like, that's a little worrisome. If, like, AI can't do that, like, how does that then into education?
No, that's a good point. That's a limit on AI. I mean, it can only put out what's put in, and if there's confusion around it, then there's going to be confusion put out.
Do analysts like this stock? They just don't like it right now?
So analysts are saying it's a show me. They're saying that, okay, yes, they have this plan for profitability, that they're going to be putting up $1 at the end of this year and $1 at the end of next year, but the stability in revenue needs to return. If we take a look at the valuation on this stock, it is trading at a massive 80% discount to the conference. I mean, it really is a big turnaround.
Almost as a 15-hour starting discussion, not a single buy.
It's a show me. I mean, it's a show me stock.
10 holds, 5
It's a show me and that's all.
I mean, right now, it's still catching up all night.
All right, Abigail, thanks a lot. I really appreciate it. Bloomberg's Abigail Doolittle joining us there.
Unless he just finally says, I'm going to go back. Is that going to be the same person that's selling the trophy right off of the first?
I don't know. What's he trading at right now?
Well, 75 cents. For part.
We'll see. All right, I think on the market here again, the S&P is up by 0.2%. The Nasdaq now flat on the day. The Dow Jones up by 0.1%. We are counting down to the close. This is Bloomberg.
Vertical farming is on the rise. As agriculture evolves, we're harvesting value in AI. Go beyond the obvious with a global perspective. Media invested in discipline.
could be disruptive. We have 80 different nationalities smartphone developers team because we have a very diverse landscape of customers.
This is Bloomberg News Now. News when you want it at the touch of a button. Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats have another.
Today's job numbers casting doubt on the Fed's next move. Inflation remains
Every Friday, right here on Bloomberg. Context changes everything.
With all these, frankly, tech can continue, but look at what we're seeing today. A record new high, but by a centimeter or a millimeter. I mean, just tiny fractions higher. I think that we'll still see that. I want this market to continue on for a little bit period of time. But look at the consumer. Boy, we're seeing signs of cracks.
Christopher Edelman, CIO over at CalSTRS, helping us kick us off to the close earlier today. The gains may be minuscule here, but tech is doing a lot more than that here. That is your biggest gainer here on a sector basis. Quite frankly, that's the lifetime of this market for most of you.
Yeah, I'm just looking at 31 now record highs for the S&P, the stock, so the semi index also at a record high. No surprise there. The Nasdaq 100 isn't at a record high, but it's pretty much flat on the day. But Nvidia a record high. I mean, how many times can I keep saying it?
You can say it again because I feel we've been talking about this for weeks, if not months to come. Just met the team leader and senior equities reporter right here at Bloomberg joining us on set here.
It would matter in terms of how we're going ahead and modeling out that cash flow and over what period of time. So if we're getting 6 inside of a calendar year, then that changes things in terms of how much attention we need to pay to individual names. But it won't change our broader allocation strategy. What about the consumer? You know, we just know today, we talk about how do you play the consumer? We had an LPD analyst on who just upgraded to a street high. How do you deal with that? I think one of the smartest plays for consumer right now is to play the premium end. So we've seen that in payments infrastructure, we've seen that in retail. So on the retail side, if we think about, say, Costco, and we compare them to different wholesalers, one of the things they have to their advantage is that executive membership is the premium end of wholesale. And they're able to hold on to upper middle class and upper class households that continue to see the value and are able to store that mass amount of product and purchase that large amount of product. So the revenues there tend to be a little bit sticky. If you look at the more premium end of credit, we've seen the same thing play out when we look across the different banks, where the large amount of shakeout has already happened at the lower end, and the premiumized customer has gone ahead and just laid down what is a very inelastic nature, if you will. So I would say premium end of consumer is where we're finding a bit more luck.
We're only on about a minute left, but I saw some of the stock picks you had over at Molly Fool, asset management with Netflix. And I'm curious about the valuation on that, given how far it's come. And I guess a lot of questions about its growth, given that it's become basically 800-pound gorilla in the space.
Yeah, absolutely. I think we have seen with Netflix and seen that at times it's really rich, but we're also really excited about how far they've come as a company. And when we think about the great shakeout of streaming services, they did really well. They were able to hold on during the various strikes that cost a lot of streamers their business. And they continue to generate fantastic cash flow. So they're turning into a mature business and then getting to tap into digital advertising after conquering streaming, which we think is a really great opportunity.
How many streaming services do you have at home? Because I last time I checked, we have something like 33 of them.
I mean, at this point, if you think about it, I mean, if you don't have cable, you kind of do, because it's just 3 to 7 streaming services in a trench coat. So, totally.
All right, great conversation, Shelby. Great to have you here. Thanks for rushing over. Shelby McFadden, senior analyst over at Molly Fool Asset Management. I might have exaggerated a little bit about the number of streaming services I have. We got a lot.
I'm counting.
Yeah.
You count?
Yeah.
So like on Thursday.
On Thursday, and then somebody just asked me.
No, what's your password? No. Are you crazy?
All right, forget Alex Steele. We are moving closer to the closing bell. Stick with us. Our full coverage starting right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, here to help you take you through the closing bell. It's a global simulcast. I'm going to get this right one day. Joined right now by Charlotte Fu in the TV studio. Carol Masser, giggling there at Radio Booth. Tim Sinovit there.
You just got to get it right before we change the name again.
Yeah, exactly.
Yeah,
We just got it straight.
Yeah, there you go, Carol Masser. Why don't you pick it up? Did you prepare?
Yes. Interesting day. We're going to get another record. Wait, I just really want to know password things. Can I get your password?
No, I'm not sharing. I follow the rules. I don't do things outside the box.
All right.
It all depends
depends on what services everyone subscribes to.
Yeah.
All I know is you give out too many I've like been blocked because I can't get in because I think
Yeah,
one of those people.
So they're starting to figure it out. That's the issue.
They're on you, Carol.
Yeah.
Hey, did you guys hear about NVIDIA? What? Did you hear about this today?
In NVIDIA's world, man, we're just living in it.
It is. It's pretty wild to see. 31 record days for the S&P 500. Another new record for NVIDIA today. It's the largest company by market cap in the world now, surpassing Microsoft, surpassing Apple. People are still buying it.
Yeah.
It's a story that people love, but you know what's another story that people once loved once upon a time? EVs. And Fisker filed for bankruptcy. So, you know, the next big thing, this is a good reminder that the next big thing isn't something that can hold on to that status forever.
Wait, does it always go up?
Well, I mean, also with Fisker though, they have to bend metal at some point to make the cars. I mean, luckily NVIDIA doesn't have to do anything along those lines.
All right, well, Fisker certainly a casualty in the EV space here. Other folks still continuing on, and of course, NVIDIA, the winner on the day here, the biggest point gainer in the point contributor to the S&P's moves to the upside on the day. 14 points higher than where it was yesterday, about a 0.2% increase as we wait for these numbers to settle. The Dow Jones Industrial Average up by about 57 points or 0.1%, and the Nasdaq, we're just going to kind of call it unchanged here on the day. It's up about 5 points. That's only good for about a fraction of 0.1% there. Meanwhile, the Russell 2000 trying to get in on the action again on the day of roughly 0.2%.
I just kind of toggling back and forth between Microsoft and NVIDIA market cap, and NVIDIA's just kind of like, you know, squeeze past them to end the day to be the world's largest market cap. Having said that, S&P 500, Scarlett, yeah, most names higher, 310 to the upside, 188, losing some ground today.
Yeah, and you can certainly see that reflected in the IMAP. Take a look at the sectors and the performances that we have there. On the downside, let's just focus on the few red slices. Communication services down by 0.8%. Consumer discretionary, that's been dragged lower by Tesla. So going back to that EV story, not necessarily playing out right now. Materials off by 0.1%. On the flip side, financials, tech, and industrials all gaining at least 0.5%.
What happened to Ball Corp? Down 6% here on the day. Cans, man.
Wait for the decliners. Maybe it'll come
I didn't put Ball Corp in there. I didn't put
Apparently
Ball Corp
not.
in there. I'm sorry. Such a disappointment.
All right, it's never too late. I'm going to get to the gainers right now. NVIDIA, of course, now the biggest. I know, so I'm going to try and go quick. Biggest market cap in the world, finishing 3.3 trillion. Can you guys keep them quiet?
No.
NVIDIA up about 3.5%. Rosenblatt Securities raising its price target on the company to a street high of $200 a share from $140. This is even, you know, Bloomberg reporting insiders selling some shares worth more than $700 million, as though Tim reminded us that's just a drop in the bucket. But NVIDIA up about 3.5% in today's session. Micron Technology up way off its highs, but 3.8% to the upside nonetheless. B of A adding it to its US 1 list, a collection of the bank's best investment ideas. Wedbush analyst also, Matt Bryson, increasing his price target to 170 from 130 ahead of the company's results next week. Stock closing at 153 and change. Lazy Boy, outperformer, finishing up about 19% higher in today's session. Company coming out with fourth quarter adjusted earnings per share and sales that topped estimates. It was up the most in I think about 7 years, so all the way back to late June of 2017. And Silk Road, a little deal action, up 24%. It's a $1 billion medical equipment company, rallying after Boston Scientific agreed to buy the company for $27.50 a share. So there you have it. I'm done.
Okay, I got the decliners. Do you want to look at how shares of Boeing and faster than I thought, Carol?
I know. A little pressure there, buddy.
Speaking of pressure, that's what CEO Dave Calhoun faced as he testified before senators over the last 2 hours. He got searing criticism from these lawmakers who accused him of failing to overcome the company's shortcomings by putting profit ahead of safety. Shares initially down by 1.91% ahead of the testimony today. Boeing quality inspector alleged that the company mishandled and lost track of hundreds of faulty parts. And then there's what's happening in space right now, totally separate from everything on Capitol Hill. Boeing and NASA pushing back by 4 days the return home of 2 astronauts from the ISS. It's the latest disruption for a program that has been beset by delays. Boeing down 33% so far this year. Also checking on shares of Apple after the run we saw last week, and after NVIDIA surpassed it to become the most valuable company, along with Microsoft surpassing that one too. But Apple shares fell after the company was kept in neutral from accumulate by Philips Securities analyst Helena Wang, citing a rally in the company stock following the recent reveal of that new AI framework of WWDC. And next, energy shares falling today. This after $2 billion of equity units. Shares ended up falling today by about 2.6%. It wasn't one of the worst performers on a percentage basis in the S&P 500. And an honorable mention goes to Philip Morris International for declining today. The shares fell this after the company halted online sales of Zyn. These are the nicotine patches in the U.S. in response to a District of Columbia subpoena related to flavored products that are banned there. Shares ended up falling only about 0.8%. They were down over 2% a little earlier in the session.
Flavored tobacco products, I just can't. I could never do menthols. Sorry, guys.
Is tobacco legal?
I have no idea.
I don't know.
Did you smoke over 20 years ago?
Did you ever smoke?
I did, yeah. Yeah, I quit over 20 years ago, so yay me. So I wasn't regenerated. All right, let's get to the bond market here. We have a rally pretty much all across the board, across the curve. It started once you had retail sales of disappointed and continued on the long end once you got that super solid 20-year auction. That moment where all of a sudden investors shun treasuries because of too much supply has not yet materialized. That solid takedown of that 20-year scar.
All right, we have some breaking news. Golden Goose, the luxury sneaker maker, was supposed to go public this week, but according to Bloomberg reporting, which cites people familiar with the matter, that company has decided to postpone its planned IPO. They've decided to shelve the listing because luxury stocks have not done too well. There's also a lot of turmoil in European stock markets because of political uncertainty.
So this is going to listen to Europe, so this is more about the